Get some free giveaways today to help you with your technical analysis. Click on the link below to go to my website and you can download one or more of these 3 giveaways. I have an ebook on technical analysis basics for you. These are the contents of the ebook, several chapters on some basics, some indicators, some techniques, looking at gaps, looking at scale for your charts, and I've even got 2 steps to a high probability trade set up there for you. Another free giveaway is this easy candlestick pattern guide to the major candlestick reversal patterns, bullish and bearish, diagrams, descriptions of how they should be read and in what context. And a third giveaway, I have this Elliott Wave structure guide, 3 pages giving you all of the Elliott Wave structures with all of the rules you need to know and diagrams of the ideal form for each. Motive structures on 1 page and all of the corrective structures on 2 pages. So click on the link below and get any one or all of these 3 giveaways for free. Hello everybody, this is Lara from Pure Elliott Wave with an updated technical analysis for XRP for you. I'm going to focus on technicals. I'll give you a little bit of Elliott Wave at the end of this video. I might have a new young person watching from New Zealand, and if you're watching, I hope I'm going to be able to make some of this make a lot of sense for you. If you know any technical analysis, hopefully you can follow along. This is almost all of XRP's price history on a monthly chart. Each of these candlesticks covers 1 month of data. I start my analysis from the major low in July 2014, and I'm noting that the basic definition of an upward trend is what we see here, a series of higher highs and a series of higher lows. And with the last highest high in July 2025, that basic upward trend is reinforced. We do still have a series of higher highs and higher lows. XRP does remain in a large secular bull market. Within this huge bull market, there are bear markets interspersing between these bullish runs. These pullbacks are really deep. It doesn't look that deep because the log scale doesn't make it look that deep. If I switch the scale to arithmetic, you can see just how incredibly bullish this market is. A slow start, accelerate through the middle, explosion at the end, and a huge deep bear market. A new bull market with bear markets within it and new all-time highs. This kind of market, you have to view it on a semi-log scale, otherwise everything early on is too squished up. I'm noticing some candlestick reversal patterns on this chart. Here we have a bearish dark cloud cover. It was followed by a bear market. At the end here we have a strong bullish engulfing candlestick pattern, and it was followed by a strong bull market. We have another one here after some consolidation and another one here after a short pullback. We have a bullish hammer reversal pattern. I haven't checked actually to see if this is a hammer. You might like to check those numbers for yourself and let me know, is it a hammer or not? A hammer has to have a wick of the candlestick that is at least twice the length of the body. You calculate the body between the open and the close, and the wick of a bearish candlestick between the low and the close. Is the distance of the body half the distance of the lower wick? If it is, then this is a bullish hammer reversal pattern. There's a bearish engulfing candlestick pattern here, and I'm pointing this out because I'm noticing not just the times when candlesticks work, but also when they fail. This bearish candlestick pattern comes in the context of a short-lived upward trend. It tells us to expect a trend change, but we didn't get any reasonable sideways or downward movement. We just got continuation of upward movement. So in this instance, I can quite confidently say that this candlestick reversal pattern did fail. They don't always work, but they do work more often than they fail. Another strong bullish engulfing candlestick pattern here was followed by good things. Could note this is actually a gravestone doji, and then we see a bearish dark cloud cover here, and I think the wick on this one's a little bit too big to be another gravestone. This is a gravestone, sorry, and this is not a gravestone doji. After the dark cloud cover, we get a little bit of sideways movement, and then we get a new all-time high from XRP. So that pattern of higher lows and higher highs does still remain intact and has been reinforced a couple of months ago. ADX is really important. It tells us what trend state the market may be in. However, it is a lagging indicator. It is based on a 14-period average here, 14 months, because we're looking at a monthly time frame, a monthly chart. ADX, the black line, has a positive slope. That tells us the market is trending. The positive DX line is above the negative DX line. That tells us the trend is up. The black ADX line is above 50, which I've determined for XRP. I should probably move it up actually. Probably above 60 would be extreme. I think that's a little bit better. If ADX reaches above 60, then this would be a very extreme upward trend. So I think it's got a way to go yet before the trend is in danger of ending. I leave the lower guideline at 15 because below that, if ADX, even if it's got a positive slope, it's too low to indicate a trend. It has to be above 15 and it has to have a positive slope. RSI is neutral. There's no bearish divergence between these pivots because price closed lower while RSI made a lower pivot. Money flow is also neutral. So there's a long way to go before this trend, the larger trend, reaches danger territory. And the most bullish thing on this chart, in fact on all of the charts, is this really strong increase in ATR at the monthly time frame. This is incredibly bullish for XRP. This is telling us that there's huge volatility still in this market. This market is not dead and there's still an upward trend intact. Even if we move into a bear market, I'd expect that to be relatively short term. I think the larger secular bull market for XRP is not over yet. At the weekly time frame, I've got this little curve here to point out to you something that you'll note in markets that form financial bubbles. There have always been markets that form financial bubbles, from the South Seas financial bubble, tulips back in Holland in the 1600s, dot-com bubble up to the high in 2000 and the crash down into 2001, and the property market bubble down into the crash that found its low in March 2008. Markets have always formed bubbles in one category or another, and currently the biggest financial bubbles are in crypto. If you can identify early enough on in a financial bubble and buy when prices are low and then sell when prices are high as the bubble bursts, you can turn a really small investment, say just $100 into thousands. You can do that in a financial bubble, but you have to be aware of investing psychology and fear and greed and how that makes your decisions, and how to work against that when you're making your decisions. One of the things to look for to identify a market that may be forming a financial bubble is these periods of growth that look akin to exponential growth. Now, it's not mathematically, technically correctly exponential growth, but it has that similar curved look that you see on an exponential growth chart. A slow start, acceleration through the middle, and explosion at the end. We see a little period of this recently for XRP on the weekly time frame, just as it made its last all-time high. And now we're seeing some consolidation. And there is really strong support about the 1.9 to 2.0 area for XRP. My bottom line for XRP is, for the short to mid-term, I am expecting upward movement, most likely as long as price remains above this area of support, 1.9 to 2.0. This area is horizontal and it has multiple tests, and they have all held, and they held before the last all-time high. So this area of technical support is very strong. I will expect it to continue to be strong until it gives way. If it gives way, then for the midterm, XRP could be in trouble. While it remains above this area, I expect good things to happen as most likely. That last period of short-term exponential-like growth came with a strong increase in volume. Volume does tend to follow price when price has those periods of time when it makes those strong growth curves. For the midterm, though, volume is declining. That's not a great concern for XRP, though, because relatively early on in the earlier stages of the next bullish run, it does tend to start out slowly, as do all cryptos. ADX at the weekly time frame is flat. At this time frame, there's no clear trend. Price is consolidating. There is bearish divergence, double bearish divergence at the weekly time frame for the short to mid-term between price and XRP, but now RSI is neutral. If it can get below 50 again, then that may resolve that bearishness. It's still above 50 though. We could see some more consolidation or pullback back down to support about 1.9 to 2.0 before this bearishness is resolved and the stage is set for the next bullish run. Likewise between price and money flow. I add money flow to my technicals because sometimes RSI doesn't show divergence when money flow will. And ATR is a measure of volatility, was starting to increase again as price made its last all-time high, now starting to flatten off as price consolidates. At the daily time frame for the shorter term, we see some reasonably good support about the 2.65 to 2.70 area. If that gives way, then I would expect price to fall down to 2.0. But while price remains above 2.7, expect the next test of resistance about 3.32 to 3.4. Here at strong support, these three candlesticks form a morning star candlestick reversal pattern. This is bullish, and this one here forms a bullish engulfing candlestick pattern. Occurring at strong support at 2.7, it's unsurprising we're getting some upward movement. I'd look overall for price to continue higher, and I'll be watching how it behaves carefully when it gets to 3.32 to 3.4. Overall, as price moves higher, we're starting to see a little increase in volume on upward sessions, but it is downward sessions in this consolidation that have strongest volume. The volume profile I will read as bearish. There was a signal here given from on-balance volume, and this is what I use on-balance volume for. Find a consolidation, draw your resistance and support lines. Sometimes on-balance volume will break out prior to price. This resistance and this support line have reasonable technical significance because they are long held, have multiple tests, but they have a strong slope, which reduces the technical significance from strong or very strong to only reasonable. On-balance volume broke above resistance on the 6th of September. That was this day here. So price was still consolidating when on-balance volume broke above resistance, and it did portend an upward movement as on-balance volume moved higher. So that's one of the very few things in technical analysis that can be a leading indicator. Watch your consolidation for price, see if you can draw equivalent lines on balance volume for the same period of time, and sometimes on balance volume breaks out of its consolidation area before price breaks out, giving you advance warning of a breakout from price and what direction it's going to be in. I'm just going to do Elliott Wave at the monthly time frame, looking at the bigger picture for XRP because this video is just going to be too long. From this low to this high, this first upward movement is a nice looking 5-wave impulse. That's the most basic Elliott wave structure. 5 steps up is followed by 3 steps back, your basic pattern. 5 steps up, 3 steps back. Looking for another 5 steps up at the same degree, but this time it's a third wave. I expect the strongest part of cycle 3 is going to be primary wave 5 because it is the 5th wave to end a third wave 1 degree higher. That is typically the longest and strongest portion of an impulse for cryptocurrencies and markets that form financial bubbles. And this is a good example. Within cycle wave 1, in primary wave 3 travelled 0.3948, primary wave 5 travelled 3.1422. Primary 3 took 18 months to travel just 0.3948 potential profit. Primary wave 5 did 3.1422 in just 2 months. This is the strongest portion of upward movement. This is where the most profit is seen in the shortest space of time. So you have to hold on for those 5th waves. My targets for primary 3 remain the same. 27.44 is calculated using 14.72. That's not a Fibonacci ratio, that's this ratio here. The length between primary 3 and primary 1 was 14.72. If we see that ratio again, then this primary 3 would reach 27.44. I do expect it probably could be longer than that though, because this is primary 3 within cycle 3. This was just primary 3 within cycle 1. I will expect cycle 3 to be a long extension compared to cycle 1. I'm using the same ratio to calculate a potential target for cycle wave 3, and I'm using the Fibonacci number sequence to calculate when these waves may potentially end, and this one is going to need to be updated. Primary 3 is very obviously not complete. It is now September 2025. It's lasted a Fibonacci 34 months, so in my next analysis I'll use the next Fibonacci number in the sequence to calculate the next potential date or range of dates for when it may potentially end. That's the best estimate we can do using the Fibonacci number sequence. Because note on this chart that sometimes XRP does exhibit waves that do last a Fibonacci number in terms of days, weeks or months. Not always though. This one 42 months, not close to a Fibonacci 34 or 55. This one 26, 5 longer than a Fibonacci 21. Here, 1 short of a Fibonacci 13. Here, short of a Fibonacci 21, here a Fibonacci 8, and here one short of a Fibonacci 13. So it is worthwhile using that number sequence to estimate when these waves may end, but you have to approach it with a fairly large degree of flexibility. And that's it for me today with your XRP analysis. If you found the technical portion of this video understandable at all and approachable, please let me know in comments. And if you thought it was just a bunch of gibberish and you didn't understand it, let me know in comments. I'm really curious to see if I managed to make myself at all a little bit more understandable for those who are new to technical analysis. And if you're new here, hit the subscribe button and the like button and make a comment, because all of your engagement helps my little YouTube channel grow.